Crazy day, that's for sure. We got plenty of fundamental FOMC Powell stuff to talk about. But the bottom line is, this is what we expect, and we expect more. There's still a lot of craziness that's happening right now in the bullish direction, despite the move in markets. Some might be curious as to why it took a little while for this move to play out, why there was so much upside at first when Powell was speaking, and then why after he started speaking did we get this sell-off. The important thing to do here, just take a breath. You want to be as calm as possible. You want to make your decisions based on a long-term basis. We all feel it. We all get emotional. We're all very in tune into this event. It's almost like a sporting event. When your team is, in the fourth quarter in the Super Bowl, you're going to feel it a little bit. That's just the way it is. So you got the entire world focused on their computer, focused on what the SPY is doing every single tick of the move. And you're going to have just simple liquidity in that. You're going to have a lot of people making moves, and you're going to see the market all over the place initially. And then you're going to see people calm down, time go on, think everything is settled, and then reality begins to set in. And we're starting to see that in the stock market. But notice, yields fell quite a bit today. That is peculiar, incredibly peculiar that yields fell. And I think this is the next event that is going to have market effects. I expect yields to go up. The Fed is trying to push yields up. That's the whole point of their hiking rates. Don't fight the Fed. The market wants to fight the Fed, but if you fight the Fed, you end up like SVB, okay? That's just the way it is. I don't make the rules. Don't hate the player, hate the game. That's the game. That's the saying. That's the rule. You didn't want to fight the Fed on the way up. You don't want to fight the Fed right now. I don't know what else to tell you. I get it. If you've been with me, it's been painful the past couple weeks. It sucks. I wish the market were a little bit more rational, but we see plenty of signs of market irrationality. That's just the way it is. And this is not an easy thing to do. There's a reason why it's a very difficult thing to do. So please understand that along with me. We're doing the best we can over here. We're not always 100% right. I don't have a crystal ball. I'm just a human just like you, trying to make my best possible judgments and use my knowledge and experience, which some might discredit because I'm only 23. But believe me, I have a pretty good grasp on things. So let's get into what Powell said today. He said all deposits were safe. I want to take a pause here. The bullish case going into this was, banks might collapse, so then Powell can't be as hawkish, and therefore the market can run. That is not a real bull case. That is not a real bull case. The economy might go into a hardcore recession. Banks might fail, and therefore the market should rally from this incredible level, flat since May of last year, almost an entire year flat. No, that is BS. That is, as Joe Biden would say, a load of malarkey. A bull case would be something about inflation coming down. Bring out the data. The bulls have been saying this for almost a year now. Peak inflation. Inflation's transitory. This has always been the camp that is always trying to fight and rally the market and getting hammered. That has been getting hammered for over a year now. The peak inflation, whatever, who cares? Inflation is hot. Core inflation is hot. The Fed has said that they are willing to over tighten. Okay, get this? They are willing to over tighten. We often change our dynamics, our paradigms, that if we see 1 month of better than expected inflation, all is well. Inflation's coming down. We've already seen this be the case. It's not, okay? We have 4 consecutive months of increasing month-on-month core CPI. We have 3 consecutive months of month-on-month core PCE on bigger bases, right up near the highest level, considering core PC or CPI increased in February over January, a continued reacceleration. My assumption is core PCE is going to do the same exact thing and be at a new inflation period high. Think about that. Core PCE, the Fed's preferred inflation gauge, being at an inflation period high. That's what's going to happen. That's the data. That's the data we're dealing with. What? You want the Fed to cut because your portfolio is getting hit? Because SVB happened? Don't fight the Fed. This is like the most straightforward thing. They're saying it. They're saying we're telegraphing it. And ultimately they're saying not only are deposits safe, banking liquidity is good. Now, the bulls are going to try and lock into this notion that Powell said, oh, bank stresses might cause, a more less bank likelihood of lending. Okay, maybe we'll get some data of that. But as of right now, that case is made entirely in the air. And Powell said the effects of that remain to be seen. So if there is no effects of that, you best believe they're going to do that extra rate hike that effect is supposed to affect. And my indications, my anecdotal indications, are that's not the case. For the first time ever, I just got a same-day lending on a mortgage. This would be one thing if rates were up and the bank was incentivized at this level to give a loan at a higher rate. This happened when rates were at the low. They have an excess of savings. Again, Powell is saying banks are strong. They're definitely stronger than they were in 2008. What does that mean? That means they have excess liquidity. I get it. There's a few instances that are grabbing all the headlines that decided to fight the Fed that are suffering pain. There's going to be more. That's just the way it is. There's going to be people in my business that are the same way. Look at Bill Ackman. Bill Ackman's getting destroyed. Why? Because he's calling on the Fed to cut rates, and they're not cutting rates. They're not cutting rates. There's plenty of people who are doing that. That exists. Regardless, the Fed is tightening. Inflation is hot. It is reaccelerating. Core is staying strong. Yes, Powell said disinflation is occurring, but he's talking about energy prices. He's talking about used cars, kind of, to some extent. He also said core inflation is showing no progress of slowing. That is what they care about. That is the preferred inflation gauge. They hiked their year-end rate, expected CPI or core inflation numbers from the December meeting. They hiked their dot plot from the December meeting. So by no means should this meeting be taken as a dovish outcome. The Fed is hawkish. They're getting more hawkish. They are not dovish. There's no reason for the market to move in that way. It has moved in that way in anticipation of that over the past several days. There's no reason for that. The bullish case makes no sense. The economy needs to crash. Therefore, the Fed can be dovish. Therefore, stocks can rally. No, this is the first time in decades the Fed is hiking into a slowing economy. The economy is slowing. The Fed wants it to slow. They want unemployment to go up on 1%. Look, I'm not trying to be the villain here. I've been bullish at times. I've been more bullish throughout my time doing this than I've been bearish. But right now, my job is to look at reality as it is, not as, my fantasy, American patriotism, futurist mindset wants it to be. The Fed is tightening into a slowdown. This hasn't happened in decades. Normally we get a slowdown, banks are failing, the economy is going down, inflation is going down, and the Fed is easing. Right now, all those things are happening, and the Fed is tightening. Okay? It's not a bullish scenario. I don't know what to tell you. I get it. The bulls are loud. There's plenty of them out there. They have been controlling the market for the past week or so, and viciously. And that's why there's a reckoning coming. I don't know what to tell you. 2 years below 4%. That makes no sense. Rates are supposed to be above 5% by year end. They're supposed to be well above 4% by year end next year. I don't know how the market gets below 4% on the 2 year, but that just shows you that there's more ammunition for things to correct even further. I don't make the rules. Don't hate the player, hate the game. That's just what it is. That's my read on it. That's my analysis of it. Happy FOMC day. That's today's video, and until next time, peace out.